Oh man, Bitcoin is pumping 4% after a triple beat on November's CPI reading, the last CPI reading of 2022, and it sets us up for a big FOMC rate hike tomorrow because markets are expecting a pivot. Jerome Powell all but has to do a 50 base point rate hike tomorrow as markets rally up 4% here. Bitcoin just shy of 18,000 here, rallying out of its rising wedge formation, trying to break out and get back into our channel at 18,700. The CPI report came in hugely favorable. We're expecting inflation to come in month on month at 0.3%. It came in at 0.1. We're expecting headline inflation, this figure here, to come in at 7.3. It came in at 7.1. And we're expecting core inflation to come in at 6.1. It came in at 6. So it's a triple beat. On the headline inflation we beat, and on the core inflation, which removes food and energy, we beat as well. And markets are responding very positively. You can see initially the S&P rocketed from 401 as high as 413. It cooled off a little bit and now getting ready for its next move. Do not be surprised to see the S&P have a really positive day today. We're already seeing Bitcoin move straight ahead, 4% up today, feeling really positive and trying to recoup the level at 17,600. Remember, this 17,600 level is from our June lows. It was really important that we were able to break above this. If we had a bad CPI reading today, we would have got rejected exactly from that level, which would not have spelled good, and I would have expected us to go retest 15,500 at the lows again. But the fact that we've managed to get a good reading at this point allows us to retest this level, build some support, and try to get into this channel. More importantly, it now means that tomorrow, Jerome Powell is all but expected to do 50 base points. You can see how this has shot up now. This was sitting at 70% before the reading. Now 83% of the market are expecting a 50 basis point rate hike as opposed to the normal 75 base points we've seen over the last 4 months. And more importantly, this now spells that we are getting to the final innings of this bear market. Now remember, I said going into this that JP Morgan reported if we were to see inflation come in at 6.9 or less, they thought we could have seen an 8% day on the S&P and potentially mark the end of the bear market. Now, while 7.1 isn't as good as 6.9 or 6.8, it's still really good. It's a better reading than we expected. We were expecting 7.3. It comes in at the 7.1 level, but markets will be feeling positive because we are seeing it start to take shape. But more important than just the number itself, it's how inflation is coming down. It's the rate of change. It is starting to really tank down. And that is what Jerome Powell is going to take confidence in. It's not just the number itself. If we take a look here at this chart and were to take a look here at inflation, which was at 9.1%, it has come down significantly to 7.1. But what I want to show you is this. Look at the line graph. It's the gradient. It's this that Jerome Powell is taking satisfaction in because inflation is coming down meaningfully. Now, there's one elephant in the room which a lot of people are not speaking to, and that is the fact that this is the easy bit of the rate hike. Now, allow me to explain. If you followed back into the Paul Volcker times, Paul Volcker had a similar issue where he had to deal with really high inflation, much higher than we had here, and he brought it down by real aggressive multiple high rate hikes, similar to what Jerome Powell's been doing with the 75 base point rate hikes, and inflation came down. But what happened was there was an underlying entrenched inflation. I think it was about 6% that was just stuck there, entrenched. So he brought down the rest from about 20 odd or wherever it was, but there was 6% entrenched. And Jerome Powell will now switch his focus to that. Because right now he's brought inflation down from 9.1%. We knew 9.1% was never going to stay anyway, right? But what we don't want to see is there an underlying 4 or 5% entrenched inflation? That's what Jerome Powell's going to be worried about. He's going to want to slug that out while he has momentum on his side to finish the job because his target rate is to bring inflation down to 2%. Now, let's zoom out because we're talking a lot about interest rates, but I understand that some of you guys don't understand why this is important, and I need to explain why this is important. The interest rate policy is what's creating the flow of money, okay? Monetary policy controls the flow of money. When you saw crypto do really, really well, and other risk assets like Tesla and any other tech stock in the NASDAQ, is doing well because there's an excess flow of money into the economy. The flow of money into the economy is very high. In other words, monetary policy is very accommodative. Right now, the reason we're in this bear market, the reason we're in this prolonged period of downturn is markets are in a tightening cycle. I know you guys have heard about this before, but what does it mean? It means money is being hoovered out of the economy. Jerome Powell is actively taking money out of the economy. He doesn't want you to have any spare money. He wants everybody just to be getting by, so that way you do not make frivolous purchases, you do not overpay for goods and services, and therefore slow down demand and bring inflation down. This is why we are celebrating the fact that we could potentially tomorrow be seeing a rotation away from 75 basis points to 50 basis points. That's a small step, right? He's still tightening, he's still increasing rates, but it's a small pivot. It's a small slowdown, which indicates that we're not likely to get 100 basis points. He stopped his 75, and we can see 50 basis points. And that's what's giving markets confidence. And markets will get confidence at a few different levels. One, hopefully tomorrow, when we see 75 basis points to 50 basis points. Two, if we go from 50 basis points to 25 basis points. And then also, when we go to zero. That's going to be a major coup. When we get to zero, no rate hikes, that is a pause. Markets will take a lot of happiness in that. And if we can see that mid to late 2023, markets will take a lot of positives from that. And then when we finally see our first rate hike, maybe even in 2023 somewhere, that is finally the period where all guns are blazing. We can start to see our next move to the upside. And it's important that through this bear market, we're able to hold our own. We're able to hold our conviction, not panic, not fall out of love in crypto. Continue to find what are our favorite plays and take these final opportunities to accumulate. Because right now, we're in a position where the remnants of the macro bear market are starting to come to an end. If you look at the wall of worry, at one point, we were at peak Russia-Ukraine fears. We're at peak China worries in terms of their lockdown. We're at peak worries in terms of inflation. When is it ever going to come down? Is it ever going to come down? Now we're starting to see things start to improve. We're not out of the woods by any means, but starting to improve. The narrative is starting to improve. A lot of work still to be done. Let's not make any mistake about it. 7% inflation is still very high. Nowhere near where they need to be. It needs to be 2%. But we're starting to trend in the right direction, and markets can take this as a positive step. Now, it's important to note from a crypto perspective, we cannot just take the macroeconomy in a silo. We have to look at what's happening in the crypto space as well. SEC have officially charged Sam Bankman-Fried for defrauding FTX investors. He's under arrest in Bahamas. Go watch my video from earlier today if you want to catch up on what's going on there. And he could be facing a life prison sentence. So I think markets will respond positively to this as well. The markets will be happy that justice can be served, and that that we don't need to worry about this. He's gonna it's gonna play out how it's gonna play out now, as opposed to him just jumping on Twitter Spaces and making public interviews which are affecting the market. This is a positive, and now we can put a line under it and we can move on. And markets look like they want to do exactly that. A nice big move here up towards 18,000. Can we reclaim that 18,000 level? That would be a really strong day today if we could do that, expecting a nice strong positive day in the equity markets as well. So there you have it, guys. A triple beat on inflation sets us up for a really good week here as we head into tomorrow's all-important FOMC meeting. We will be streaming that live together, guys, so make sure you're subscribed, make sure you hit the notification bell, make sure you're part of this community so you do not miss any of this content which is moving crypto markets. And I know it's difficult during a bear market, but this is when every minute you spend in crypto, every penny you spend in crypto is amplified. It's easy to spend time watching videos in a bull market. It's easy trading in a bull market. It's easy investing in a bull market. Everybody does it. But the hard bit is this piece. This is the piece that people either get right or they give up and get wrong. Thanks for watching, guys. Hope you enjoyed. Smash up likes. Don't forget to subscribe. Check out this video on Sam Bankman-Fried here, and I'll see you in the next one.